After a day of bad news from the markets, you might feel like reaching for a cold beer. So our next topic might actually hit the spot. We continue now with our week-long series. It's called Summer Stock, and today we're talking about Budweiser. American icon Anheuser-Busch was acquired in 2008 by Belgian beer maker InBev, but our next guest says it hasn't exactly been a perfect match. With me now is Tony Pontoro. For 17 years, he ran Anheuser-Busch's sports marketing and was named a top executive by Business Week and the Sports Business Journal. He's now the CEO of Pontoro Management Group, a sports and entertainment brand manager. So the perfect person to talk to. Good afternoon.
Good afternoon, Carol.
You should have brought samples, though. We could all use one today.
Yes.
Hey, so this hasn't been a great marriage, has it?
Well, I think, it hasn't really. We know InBev was very good financially. We knew they were good cost cutters. But you have to grow the numerator side of the business. You have to grow market share and sales. The cost cutting will only sustain yourself for so long. They haven't shown yet that they can grow their market share and grow the sales for their company.
What do you think they're doing wrong here?
Well, I think, for one thing, they're not focused as marketers. I mean, they have some good people around, but you have to be sensitive. There's a little bit of common sense.
It's kind of wild
business.
when you think of Budweiser and how smart their marketing campaigns have been. They really have known in the past how to market themselves.
Beer is a pretty simple business at the end of the day.
Yeah.
We all observe as people, do it right, be smart. It's about people gathering, having a good time, have some fun with the business.
I mean, how important is summer to a company like Budweiser?
Well, it's huge. It's between Memorial Day and Labor Day, it's about 40% of the business. August, the month we're in, is the largest month. It's 11% of beer sales in the whole industry.
Huge then.
Yeah, it's very big.
What about the relationship with sports teams and so on? I mean, that's got to be huge as well, and arenas and so on.
Well, I mean, and when I was there and continue today, they represent about 80%. They sponsor 80% of all sports teams.
80%.
Yeah, they touch it, from stadium signs to TV to promotions. They have league associations with the NFL, the NBA, Major League Baseball, NASCAR. So it's big business.
So they're big business. It's huge for the sports teams. What about the give back? I mean, in terms of sponsorship, how important is it then back to Anheuser-Busch?
Well, it's all about loyalty. It's getting that emotion with that consumer that says, I'm a Yankee fan, I'm a Giant fan all the way across the country, and having that loyalty.
All right, and I'm both Yankee and Giant. So talk to me about the economy. I mean, it's funny, it's not so funny. I mean, we look at a day like this where the markets are selling off. We're talking a lot about psychology and consumer sentiment. There's a lot of concerns about what happens with the economy going forward. People are talking about the potential for another recession. Talk to me about the importance of what's going on in the economy to something like an Anheuser-Busch.
Well, what we all sort of forget is when you cut people, and Anheuser-Busch, they cut at least 3,000 people to my recollection. That is beer drinkers. That's people out of jobs. Every person that gets cut has friends, family, whatever. That's a negative feeling. I mean, you have to, as we all are looking at this economy and we all look at cutting costs, and costs are people, when are we going to start maybe rewarding some companies for holding on to their people and finding other ways to grow their business? I
mean, but how do you balance that? You know that there's been so much pressure on companies, especially when you see one that does a link up like InBev did with Anheuser-Busch. I mean, there's so much pressure to see the synergies, to cut the costs, to make sense of this deal. Because if you look historically, a lot of these deals, these M&A deals or these takeovers, they don't pay off ultimately for shareholders. So there's a lot of pressure on them to make sure it pays off.
Well, this is maybe a little bit of a socialist comment, but the Wall Street did not reward Anheuser-Busch for years. Even when it was doing 10 or 12%, the stock price was flat. That left them then vulnerable for someone to come in, raise $52 billion in 2008 when everything else was crashing. They loaned over 17 banks $52 billion and bought the company. Now you have to pay off that debt. What do? You can't grow your business that fast. You cut costs.
We did a cover story, or we did a story in Bloomberg Business Week that we looked at Anheuser-Busch and kind of what has happened to them over the decades, because it's been such a family-run business. That was part of it, though, right? There were problems internally.
Well, it probably got a little inside. It was a public company, as everyone learned. Everyone thought the Bushes owned the majority stock, but it was very fraternal. It was very close-knit, but there was some cost to be cut.
Hey, Tony, I don't want to let you go without asking you about Bud. They're introducing a new can, I guess, as part of a strategy to appeal to younger consumers. What's the dangers, though, in doing that, and what's become such an iconic brand, the labeling and so forth? Well,
what you're trying to do is bring in the new entry-level drinkers and be contemporary. But you got to be careful it's not to turn off the baby boomers like me to say that's not the can I grew up with.
We're nostalgic about.
That's the bottom line. How do you balance that?
But do you think they need to do this to kind of go after?
They have to, because the light beer category has grown. Budweiser has not grown. They need to grow Budweiser. They're trying to get the new generation.
All right. Interesting conversation. Tony, thank you so much.
Carol.
Appreciate it. Tony Pontoro over at Pontoro Management Group. He's the CEO.